Should we buy or sell the dollar index? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So here we have the US dollar index. And we can see an 8% move from the 52-week low, and it is very close to its 52-week highs. You can get access to all the educational material by going here. So here is the chart of the dollar index, the the king of the currencies. Okay, so we can see here when we look at the super giga picture, then we could argue that we have something that looks like a monster of all monsters, inverse head and shoulders pattern. Here is a head. Maybe this is a monstrous right shoulder. That is a possibility. At least that is a pattern that jumps at me. And this is a monster pattern, though. There are various theories for why we could see a runaway strength in the US dollar. You have a theory called the dollar milkshake theory. So that is something to Google, and you also have a bunch of videos about that out there. The thing is that that is not, what the the money masters want either. So that's something to think about because initially you might assume that, well, wouldn't a very strong dollar be just what they want? No, it's much better to have a stable development. So stability is the name of the game. When you have this runaway move, that would be very pathological. We don't have that yet, okay? Clearly. We have this kind of price action that we see here is exactly what the money masters want. These time cycles, rise, decline, rise, decline. This gives stability and predictability. What is happening here, though, is that this week we saw a breakout above a lot of prior resistance levels. There still is a lot of resistance above us, but there is some very substantial strength here. So a very key event that helped here is that we found, key support. So you can see here, the blue 100-week moving average. It does have a pretty long history of being a very good place to enter some bullish trades. And yeah, it is working out pretty darn well so far. And definitively seems to inspire the bulls. And let's actually measure how far it would have to rally to have a full bore breakout. So all the way up here, that would be 6.67%, and that is very big though in Forex. But we did, as we saw, have a time cycle that corroborates this move. If we go here to the daily data points, we do a very strong move. So let's actually look at the other indicators to see whether there's some risk of being overbought. So on the weekly data points here, when we look at the RSI, during previous strong rallies, we have been able to go higher, but it also is the case that this current RSI level, it is something that has triggered pullbacks in the past. The distance from the green 50-week moving average and the blue 100-week moving average is at a very high level. We have, however, been able to go above it before, like here in 2014, 2015 rally, this super rally in the dollar. Then we did see, very, very high readings on these overbought indicators. So that is a possibility. And also in terms of the MACD here, if we look historically at MACD, we are not at like an extreme end of the range. So if the bulls really get into action now, then yeah, there could be a lot more fuel left here. Let's go here to the daily data point. I think if we look a really big picture here on the dailies, looking at the PPOs, RSI, and also the MACD, we are at an elevated level, but we are not at a level that is like easy place to just put in a short position. There actually is the potentiality of a much stronger move, meaning that there could, even though we have seen some strength yet so far, the last days, if the bulls really are serious about this and they build momentum, then they really can smash through all of these resistance levels. And the breakout above these resistance levels, that would be something that the world's market will notice, because what happens in the dollar index is huge. It's a really big deal. And we also did see this giga picture inverse head and shoulders pattern. So this could get really interesting. And as I said, what happens to the dollar is very complicated. It's not simply the case that, oh, a higher dollar is good or a higher dollar is bad. It's more about how the move happens. Like, the stock market going up is not good or bad, but it can be bad if it happens too quick, as an example. Okay, so let's look at seasonality. Okay, so when we look here at that, over the last 5 years, February is the strongest month, closing higher 100% of the time. March closes higher 75% of the time. The last 10 years, February is very, very, very strong. And the last 20 years, then we do see that February closes higher 58% of the time. March tends to be a bit more flattish. And then April is weak, but then May is strong. So I think that if we sort of take all the coming months together, I think that you could make a pretty decent case that the seasonality here definitively corroborates a bullish thesis for the dollar. Then we look at the correlations. Weekly data points first. Minus 65% correlation with the S&P 500, which means that if the dollar goes up, that has a tendency to actually have a negative effect on the S&P 500. And we have a minus 61% correlation with gold, 19% positive with the 10-year Treasury yield, and unsurprisingly, we have a 100% perfect correlation between the dollar index and the dollar index. That's not a huge shock. And then we have on the shorter time frame using daily data points, then we do actually have a 66% positive correlation with the S&P 500. But when we zoom out here, we do see that the current strong correlation is on the high end of the range. There usually is a much weaker, and even sometimes, as you can see, a very negative correlation between the dollar index and the S&P 500. Then we do have an 11% correlation positive with gold now, 66% with the Treasury yield, and then again, of course, perfect with the dollar index. I chose to just let the dollar index stay as it is, such that those who are very new to correlations can instantly see how it works. So 100%, because, it's obviously going to be a perfect correlation. So let's just quickly maybe look at, because gold is more consistently it certainly doesn't have a strong correlation with the dollar. So let's quickly look at what's happening here with gold, because there is some kind of link. The GC, we look at the futures. Yeah, so gold is doing its classic thing, really. It's just goofing around here, up and down, up and down. It doesn't really have a direction in life. So you see that, you could make the case, let's draw it a bit bigger, that we have something that looks a lot like a rounding bottom in development. The problems with a rounding bottom is that they are formed like this, a very jagged movement. And that is definitively what we see here with gold. We did have a bit of a sell-off this week. It is approaching a territory that is a bit dangerous. If the bears break these horizontal support levels, then we could certainly see weakness in the gold, and that would be beneficial for the dollar to an extent. But there wasn't like a 90% negative correlation between the dollar index and gold. If there was a 90% correlation negative, then then you could make a very strong case, that they move opposite each other, but the correlations are right here in front of us. There only is a minus 61% correlation. And many times, as you can see, it's been even milder. We are not at the strongest negative correlation. Like back here, as an example, you did actually have minus 95% here between the dollar and the gold. Then they really did move opposite each other. But there's also been times here where even on the long term, you had like a 17% positive correlation. So to sum up, I think that there's a pretty strong bullish case here for the dollar. It might sound very like strange and doesn't really make sense when you hear about all the money that's been printed, but there's a huge incentive structure that's made to push money into the dollar. The dollar, the dollar, the dollar. There's a massive incentive system out there for that. The thing is that this is also a very double-edged sword. Due to the way the financial system is structured, there has always been a risk that we could have a runaway move into the dollar. A move that is so strong that makes the dollar so strong that it is pathologically strong. And this is one of the paradoxes you can get yourself into when you want to be the reserve currency. So that is definitively something to watch out for. Because the primary thesis for many people is that the dollar is going to crash. I think that very long term, I definitively don't think that the dollar will be the reserve currency forever. What is something to just be aware of is that there is currently a lot of work being done to create a digital dollar, a competitor basically to the cryptocurrencies. And given the breakdown we have seen in the cryptos, that could become very beneficial for a launch of a digital crypto dollar. And that could be very disruptive. So that is definitively something that could benefit the dollar, not just in terms of just outmaneuvering and frankly potentially crushing the cryptocurrencies, because I don't think the crypto community is prepared at all for what that actually implies. Because they think that, because the reason why cryptocurrencies are currently accepted, that is because you could make a tech case for why they should be around. Meaning they have benefits that you don't find in the dollar. But the split second the crypto dollar is out there and it does the same things that the cryptos do, then you don't have that argument anymore. The only quote-unquote reason the establishment would argue that you have for using cryptos is that you want to try to get away from the regulated system, meaning you are using cryptos not because you love tech, but because you are up to shenanigans. That is what is going to happen when the crypto dollar comes out. So really be prepared for that. So yeah, exciting times ahead in the world of currencies, and yeah, it's going to be very epic and far more epic than many people are prepared for.